Hi there, I'm Irk, and this is my channel, Get Irked. In the past week, we saw the market kind of settle off, although the rally seems to be continuing. So as we go into next week with the CPI and the Fed report, what's going to happen? And more importantly, what were the moves I made in my own portfolios last week? SoFi Technologies was this week's winner in the investments in play portfolio for 2 weeks in a row, gaining 16.52% this week. There is no news driving SoFi outside of the fact student loan payments are going to be kicked back in. That's what's driving this momentum. However, as long as there's momentum behind the stock, it is possible that SoFi could go higher from here. Canopy Growth Corporation is once again the biggest loser in the investments in play portfolio, dropping another 17.95%. Since it broke that key $1 mark a few weeks ago, it has dropped an additional 36.15%, down to its new low of 66.40 cents. I have what I have, and I'm not adding anything else to Canopy. And you might ask yourself, why wouldn't you just take the loss? Well, at this point, Canopy is about 0.5% of the portfolio, which means if it goes to zero, it'll ding the portfolio for 0.5%. I know it might sound crazy to some people, but for me, I've already lost so much that I might as well lose it all and have the story to tell in a future video. Additionally, there is the slim possibility that they could come back from this. So I look at it as a lottery ticket on this play. Cannabis is under huge pressure, and it's hard to see where it's going from here. Lyft keeps getting a lift, and I have to keep making that pun week after week. For the second week in a row, Lyft gained 8.98% this week and hit my upside target at $11, where I said it might hit last week, which was a previous high before it reported earnings. While it is possible that Lyft could keep going higher from here, I think this is more of a short squeeze, and I do expect Lyft to pull back from here. There's really no fundamental news that has changed for this company. Golden Minerals is once again the biggest loser this week, dropping another 14.93%. While it is true that reverse stock splits are often a destroyer of value, this has been absolutely epic and a very poor choice for management to make. Since management announced the reverse stock split a week ago last Tuesday, it has dropped an additional 41.56% from where it was. It dropped more than 14% just on Friday alone, the day of its split, dropping a total of 14.93% for the week. There are no positive signs for Golden Minerals. In fact, people could continue escaping this one, and it might actually go back under $1 before you know it. Lyft's rally this week meant that it was time for me to take profits once more, and I did so with a sale that went through at $10.35. Even though I believe Lyft could go higher from here, I need to manage this position, and since it is a relatively new position, I'm going to work toward lowering my per share basis. To me, that's more important. I'd rather have a really small position that's incredibly successful than a really large position where I'm underwater. The sale locked in 25.45% in gains on shares that I bought for $8.25 back on May 12th. It also reduced my per share cost 4.37%, down from $9.15 to $8.75. From here, my next buy target is $7.95, slightly above Lyft's all-time low at $7.85. And my next sell target isn't until $16.35, just below a point of resistance Lyft has seen many times in the past. Palantir continued to see the benefit of the artificial intelligence craze this week, rallying over $17. And this is a great example of why I always use limit orders when I'm buying or selling. I made a sale at $17, and on that day, from its high to its low, it pulled back 15.38% in one day. Even though this just barely crossed over my cost basis, this sale locked in 136.77% in shares that I bought for $7.18 on May 9th and 12th of 2021. It also served to lower my per share cost. Now, only 0.6% from $16.55 to $16.45, but when you've seen a rally of this size, I need to reduce the allocation in case Palantir pulls back. From here, my next sell target is $19.65, just below a point of resistance Palantir has seen in the past. And my next buy target is $7.45, quite a bit off of Palantir's lows and above a point of support it's seen in the past. It will continue to be volatile as this is part of the AI craze. SoFi Technologies just can't stop rallying on the back of the fact that it's going to start getting student loan payments again. It popped through my next sell target at $8.18, and this sale locked in 91.12% in gains on shares that I had bought for $4.28 back on December 28th of just last year. Additionally, the sale lowered my per share cost 3.45%. from $4.35 to $4.20, where my position has now got a cost basis under SoFi's all-time low. Accordingly, I've set my next buy target at $4.46, slightly above the low SoFi saw in the last couple of months. And although this breaks one of my key rules, it will raise my cost basis. Since it is under the all-time low, I don't mind that in this case. If SoFi continues to rally, I will take profits, with my next profit target at $10.32. Slightly under a point of resistance SoFi has seen many times in the past, but I believe this one will continue its momentum from here. With all the volatility going on in the market, it is time for gold. And in my speculation in play portfolio, I didn't actually have a real gold position, just a high-spec miner. This week, I opened up a new position in the Sprott Gold Trust. Now, what's different about the Sprott Gold Trust from the ETFs GLD or IAU is it is one-to-one backed by gold, whether you believe the conspiracy theories or not. Many people believe that there isn't enough gold backing up all of the trades going on in GLD and IAU. But Sprott backs its asset one-to-one. For every dollar the asset has, it has to have a dollar in gold. So this is the closest to having physical gold in a paper-based portfolio. I made my first buy on the 5th at $15.25, a key level of support. And since it was such a small position, I'm going to be pretty aggressive adding to it, with my next buy target at $14.80, above a past level of support. Since I'd like to hold gold for the long term, and a lot of people think it's going to see new all-time highs, I'm not going to sell any of this position right now. It's just too small. I'm going to keep building it up from here. But I do like having physical gold even in the speculative portfolio. To learn more about long-term investing and to follow my moves in all of my portfolios, check out my website, getirk.com, which is always 100% free. Please hit like and subscribe. It really does help the channel out, and I appreciate it. And I'll see you in the next video.